Hi, welcome to Westpac's end-of-day wrap for Thursday, August the 25th. Things started off reasonably well in Europe. European markets benefited from the late rally in US stock markets at the end of the US session yesterday. A couple of stories too. Some disappointment, of course, that Steve Jobs is stepping down as CEO of Apple. I love my MacBook Air, by the way, Steve, so thanks for that. And he's still staying on as chairman, but the Nasdaq was marked down when Apple stocks fell away. Warren Buffett is investing several billions in Bank of America. That lifted BOA's stock and also the finance stocks more generally. We had some numbers in the US economy on weekly unemployment. They were distorted a bit higher by a strike that's been now largely resolved, so that blip was largely ignored. So really it was a modestly positive day for most of the European session and the early part of the US session. But then at about 3 o'clock London time, we saw a sudden 4% drop in the German market, the DAX. It plunged from up about 1% to down 3%. A whole range of reasons have been offered for it. I'll actually have to read them to you to make sure I get them all down. One was there was a rumour of a ban on German short selling. That's since been denied by the regulator in Germany. Another rumour was that Germany would lose its credit rating, its AAA credit rating. That's been denied by all the major ratings agencies. There was another rumour that the current short selling bans in other parts of Europe would be extended, but apparently there's been no announcement on that. And even Nobel Prize winner, economics prize winner, Joe Stiglitz, he happened to be speaking in Germany today, and he said that there's a high chance of a US recession. So even he got a bit of the possible blame. But look, we don't really know at this stage what caused it. The point is it happened, and it took down other European and the US market with it. There's been a bit of a bounce back so far this afternoon, but as things stand at exactly 5 o'clock in London, we've got the Dow down 1.1%, similar losses in the Nasdaq and the broader S&P measure of that market. And in Europe, the FTSE down 1.4%, the French market down 2/3%, and the DAX in Germany is down 1.7%. There was also some toll taken on commodity markets. For example, oil prices are down about 1% today, $84.38, and you can see if you look at intraday chart, you can see that drop in the oil price occurring just as the DAX was falling away. On the other hand, copper prices are up 2% today with just a very temporary blip on the German stock market decline. Gold is down again, but only 1% today. It's at $1,740 an ounce, so down around $160 from its peak a couple of days ago. And the Aussie dollar been trading a pretty tight range, but at the lower end of it at the moment at 104.40. The top end today was 105.20. That's about it in terms of things to tell you about today. The two big things to look for tomorrow, of course, in Australia, Glenn Stevens is speaking to the Parliamentary Committee. He addresses twice a year. Given that these are politicians asking the questions, I suspect he'll get a lot about the prospect for interest rate cuts, worded in many different ways. The pollies love to have their names associated with rate cut talk, of course. And that's going to be helpful for us because, of course, at Westpac we're talking about there being a sequence of 4 interest rate cuts starting in December. But the current sort of published Reserve Bank stance is that they still have a mild tightening bias. So we might get some more guidance on how that view is lasting and persisting at the RBA. And of course, Ben Bernanke is speaking in Wyoming at 3 o'clock London time, so that's midnight Sydney time. And this is the big event where a lot of investors seem to be hoping that he will be hinting at some further stimulus from the Federal Reserve. I think the best we can get is that he'll explain why they've cut their growth forecast, to what extent they think it's long-term factors rather than just short-term disruptions that have lowered their forecast, and if it proves to be more long-term issues, what they could do in the future to potentially stimulate the economy if they decided it was necessary. But I certainly don't think there will be a signal at this early stage. Our view at Westpac is that they will put in place further stimulus, another round of quantitative easing, but that's going to be a story for the first half of 2012. Okay, I'll leave it there and speak to you again tomorrow. Bye-bye.